Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called.
Let's talk execution, let's talk speed. That crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promises keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance-based drawdown, standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charting the vision, strategies align with every trade. Our future is defined. Charting the vision, strategies align with every trade. Our future is defined.
Then the lights, let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Heat in the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 will match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning and happy Friday, everyone. Let me just quickly increase my charts so that you can all see them, because I know that you do struggle. But happy Friday. How's everyone's trading been this week? Has that increased? Have we increased? Oh, I increased the wrong screen. Give me 1 second. 200% on the wrong screen. I've got, I think, a nugget of information for you all today, which we'll take a look at momentarily. Give me 1 second. I just need to double check which screen is which again. Okay, that's wicked. That is 4. Fine. 225. Go. Wow. Wonderful. Okay, give me a moment, team. So markets, what a great start. What a great finish to the week. Not. Very choppy yesterday. Very choppy indeed. I don't know if you got caught up in the chop. How many of you tried to take longs or shorts? There was definitely a short available, so we'll touch upon that momentarily, but it wasn't during the open. It was about midday in the US session. So if you lot trade continuously throughout the US, then there was a great opportunity to get in. But one thing to remember is when, obviously, I don't like the way this chart looks. I can't look at a singular chart. I have to look at multi-layers, but take a look at this just the way it is, just for clarity, so we have a bigger screen for you all. The way the market has been this week, when I come into the daily analysis and I look at top down, my first point of view is, how did yesterday's candle or yesterday's price action and volume trade versus the previous days? So we've had quite a bit of choppy price action this week. There has been good moves inside that. Good morning, everybody. There has been some good moves inside those intraday positions, but overall it's been very choppy. We've seen split chops, fading of longs, coming in to smash the bids. And then obviously we've also, on the flip side, looked to lift the offers. So we're seeing a lot of volume transact, or a lot of volatility at least. Now, looking at yesterday's candle, and specifically just looking at this specifically as a confluence of understanding what could happen. Now, the overall body maintained itself. It was pretty much an inside day. So you have to bear in mind that if we have an inside day, we really need to see some form of move to break out of that, to give us an identification of whether we're going to be actually moving into some form of momentum and trending markets, or whether we're actually going to just be choppy, range bound, and very corrective. So expectations for a lot of this week were corrective, specifically after we didn't see much movement. This very corrective from Thursday the 8th, and we had that nice expansion, so there was that expectation that we're going to get some form of decent flow trading into the market. Next day traded higher, again, nice candle, not the greatest of candles. It was what we would call a hanging man. So before this candle, of course, hanging man, and then we had essentially a spinning top. Hanging man, spinning top, so suggests that overall bullish tones are starting to fade out of the market. So we can still be long, but realistically, market is now looking to roll over, or at least soften momentarily. And then trading into Thursday. We rolled over. You can see we rolled over. Then trading into Thursday, we had an inside day. Candle pretty much failed to trade below in terms of the body. We had the wick, and we had a wick to the upside, but the overall body was maintained inside. These 2 days were really nice. And again, this day was really nice, and this day. But obviously we had to take this into consideration, right? This candle here. That is awful. Give me 1 second. That is magnetized, so it won't show. So that just shows that we are potentially softening in the market. It doesn't mean that we're going to roll over and create a V reversal and start trading to the downside. It just means to be aware. You can't really trade pure price action, in my opinion. You have to really use everything as a confluence, whether that be volume, VWAPs, moving averages, technical patterns, RSI, MACD, some form of arbitration, some form of divergence, or you're just looking at pure kind of like overall PA, but I can't do that. Sorry, it's low probability to do that. It's not that I can't do that. I don't want to do that. In terms of themes and market themes, I always like to break down the economics on you, just to show you where we're going. So, made my notes this morning. Give me a second. Overall summary. A lot of stress in the markets. So we had the Dow Jones investigation, or the DOJ investigation. We had, obviously that was the DOJ investigation into the Fed, which obviously creates indecision and uncertainty. It's the start of Q4 earnings season. So we'll see a lot of US stocks start producing and reporting their earnings, which puts a lot of tension on the markets. As an investor, as a stock investor, earnings will give you the ideas of what realistically is going to happen. Now, what we need to look at is, that was a crap way of explaining it, by the way, but all I care about, among a number of other things, is the company going to make higher revenue than last quarter? That's all I care about. And then if that's okay, I continue holding the stock, or I'll continue to look at investing in the stock if there's volume, if there's everything else that I look at. And it's a really simple edge, and it continues to pretty much outperform the benchmarks on a YOY basis. So we continue to do the same thing, and we continue to do that no matter what the market does. But what else we saw? Inflation pressure. So yeah, okay, CPI was cooler. Obviously, Thursday's PPI and strong retail sales suggest that the US economy isn't slowing down. But there is justification to cut rates, but not deep cut rates. So we might see 25 basis points, but we're not going to see 50, 75, 100 basis points as realistic or as immediate that we would like. There is still the idea that rate cuts are coming in April, but it will realistically be more of a 25 basis point cut unless we see better data. WTI crude, on the back of course, the Iran situation, is still trading below $60. I don't know how much you know, but if oil stays under 60, it's pretty much a disinflationary force. So it will help stocks, but it hurts energy. So that will also translate into, it will hurt any indices that are energy heavy. So one of the biggest indices that is energy heavy is the FTSE 100. So potentially we'll see that. Good morning. And then again, the last summary realistically is 100,000 on Bitcoin. So that's still the target. We are still keeping an eye on whether Bitcoin can actually reclaim 98,000 before the weekend. So since it's Friday morning, we want to be looking at how over the weekend we're going to be looking at what's happening next week. What risk do we hold going into the weekend, and pretty much preparing some form of weekend risk report, however you want to word that, some form of end of week analysis, end of week report, exposure risk report, so that when you're going into the weekend, you know what to do, you know how to action it, you know what you're holding, and of course, you know what you're going to be aware of over the weekend in terms of data inflection points. So are there any instruments that anyone wants me to focus on first? Do you want me to focus on the indices? Do you want me to focus on gold? Do you want me to focus on crypto? Do you want me to focus on FX? Any particular instruments before I just dive in? Good morning. Euro dollar. How are you positioned on that, Wiz? Because I know you were long or looking for longs. And Kiwi dollar. Okay. Wow. I'm pretty good at this. Good morning. I am pretty good at this if I do say so myself. Who sung that? What artist? I can tell you straight away, but I'm going to give you a quiz. What lyrics did I just sing? If I do say so myself. What artist sung that? Gold, very choppy. It will be. All right, so on Tuesday we discussed on Tuesday for those that are American. On Tuesday we discussed the ideas of getting short from 118s. I mean, we continue to the downside from obviously late December. Markets continue trading lower, trading into end of last week. Obviously we had that bounce off of this area of demand, which again, it's in the middle of this range. We always talk about how you shouldn't be trading in the middle of a range, never diddle in the middle unless you're already short. You can of course add to continuations. I don't know who you're talking to, Mohammed. I've not said it's bullish. I'm guessing you're talking about the gold commentary above. I hope you are, because you are well wrong. You are well wrong. Overall, you know, still looking for euro dollar to come back down into that 115 range. So let's see if we can continue. There is obviously the theory that euro is going to be strengthening, with the idea that we're going to see the dollar weaken. As the markets have traded out this week, there's something, you know, I'm looking at the way dollar's moving, and I just see a recovery in the dollar right now. Good morning. I just see a recovery in the dollar. So, you know, euro lower, pound lower. It changed from the beginning of the week, and that's just because of the way the dollar specifically traded throughout this week. So it shows to me that there is strength coming back into the index on a DXY basis, which means you're just going to be short euro. So for me at the moment, you know, if I'm looking at euro and how I'm going to be playing it just purely on the daily, right, I'm looking for it to come into this extreme. But where would I like to get long? It just has to be inside somewhere in here, right? I don't mind where. When we come in, I'll just keep an eye on it, because I just think we'll see something like this. We might even see something like this. We then break up, we then come back down, and then we go. We are in a range. You know, I don't like this level really to get long, but it could come off of this level. And the only reason I don't like it is, whilst it took out this structural high, it failed to take out the extreme, which again just suggests that this is within a range. Both sides of the range are weak, so there's no strength really to be had on either side. We've just got to wait for that somewhat of a breakout or momentum to kick into the market. Bear in mind, it's still the beginning of the year. It's the first month. You might feel like you're being left behind because there's lots of people on social media flaunting their record payouts year to date, or flaunting how much money they've made this year so far. But just remember, it's not how much money you make in a quick succession period. It's how much you keep when you're wrong, okay? You have to make sure that you're in this game. Yeah, the extreme is where realistically the only place I want to get long from. I can see markets trying to trade off of that 115.5 level, but overall extremes for me are realistically the prime area. But I'll still get long if I see something. You know, this to me looks like it could be taken. So 114.75, maybe trading it to 114.5 is a level that could be indicative of a good opportunity. Alternatively, even trading down at the absolute extreme, you know, trading just above 113.96, so let's say 114. Looking to get long around 114 is a nice little level to trade off of. But if you look at the depth of that, that's trading off of 114.65s all the way through to 113.96s. So it's on the daily alone, you know, you've got a decent range to get long from. So that's pretty much how I'd look at euro dollar on a daily. Okay, so these are just the refinements from our discussions yesterday. So obviously trading into the extreme, had a nice bounce, and then we just traded through it. Had a nice bounce, swept this liquidity, continued with the overall supply side momentum. As you can see, you know, we had this level get taken out, so we had all of this order flow into this level failed, we come back down, supply takes control, we trade back down. There is, I guess, some level of supply in here, but we take out that liquidity, we trade up, we respect it. Obviously we could have got a short, so that short again was from the beginning of the week, and then we really just trade down in line with that. Yesterday's PA obviously was coming off the back of these moves where we were talking about that bearish flag continuation, which if you just come in, sorry, I've got a bit of an itchy nose. So Wednesday, you know, very inside day. Thursday, huge move to the downside. Overall, we're just looking at that momentum, really. You know, I think looking at the lower time frames, there's definitely shorts available. So you know, we had some significant volume from this particular node area here. We've traded below, we've come down, we've come back into the extreme of this supply, which broke this leg. So we could look to get short. Give me 1 second because my drawing tools are there. We could look to get short once we trade. What time is this? This was just pre-Frankfurt Open, so you'd have to be looking at getting short before the open, which is not really a major issue. We're looking at continuations to the downside, so why wouldn't you get short? But realistically, a short from inside here, how you're targeting it, whether it be 1-to-1, 1-to-2, you know, there's a 1-to-1 about there. 1-to-2 is also available. Wow, it's cold in my office today. Where else do you live stream? Wherever I live stream, Mohammed, is purely, so I've got Facebook, YouTube, X. I'm trying to get Kick. There's another one. I'm not very good at all of this. Kick, Twitch. Is it Twitch? TikTok doesn't do it, but I'd love to get on TikTok. I would love to stream across all channels, wherever I possibly can, all day, every day. But right now I'm streaming across X, YouTube, and Facebook maybe, but I don't think anything else. So wherever you're watching it, like, subscribe, turn notifications on, please follow us. Follow me, you know, wherever I may be. That is a bad line, my bad. What's up, Ward? Are you trading today? Do you know what? I am going to be trading today, but what I will be trading is primarily indices. So I'm going to be looking at US markets, US Open. I'll be looking at US 500, ES, NASDAQ, NQ, just to see if we can get maybe some form of intraday position inside that. I'm really excited actually to discuss cable. Yesterday I called a short on cable. I don't know how many of you took it. I don't know how many of you actually traded cable or how many of you actually made the move, but there was an absolute weapon of a trade in cable. So there's your short and euro dollar just off the M15. We could really refine that going down into the M5, M1 if that's what you wish to do. Not a problem. I don't mind how you trade as long as you are consistent in your edge with your risk management. The 5 minute still presents multiple opportunities in line with the higher time frame and mid time frame, so you don't need to cry. Don't need to worry. Don't need to cry. I don't know what I was saying there. So same level on the M5, right? I mean, not much changes. For me, you want to be seeing an M15 break. You want to be looking for lower lows. And realistically, you want to be trading from the extremes of the M15. You don't want to be getting caught up on the M5, M1 chop unless we've already reacted to a supply on the mid time frame or the higher time frame or an area of resistance in terms of this short, right? So if you really want to get a better entry and refine it after we've come into the extreme on the M15, we then need to see, well, at the moment on the M5 we're bullish, right? Look, high highs, high lows, high highs, high lows, high highs. So at this moment in time, let's just do this. That is a weak area, so we won't do that too much. So we are trading a pullback on the M5 to realign with M15, but at the moment on the M5 we are bullish. So what I'd like to see is this: a break of all of the structure to the left, so failure of demand, and then I'd like to come back in. We could get even more intricate and actually look at, why did demand hold? Are we creating a head and shoulders pattern? Yes, we were. We then trade lower. So I'm going to get this level out so you can see it. So that's how the intricate PA was trading, and then we overlay it with the whole context of the move. But once we get that leg down, we're now below the session VWAP. So we're below the session VWAP. We could then actually look to get short from here. Stop wise, entirely up to you. Look, still have your stop at the best possible scenario where you get mitigated of risk the best, right? You can never eradicate risk, but you want to be able to stay in a trade. Now, luckily in this particular position, based on overall momentum, based on overall order flow, we had an opportunity to be in this. You know, there's a 1-to-1, there's a 1-to-2, there's a 1-to-3, maybe a 1-to-4. Yeah, you know, 1-to-4. So I'm not saying you're going to be holding 1-to-4, nor am I saying you can hold a 1-to-3. You may only want to hold a 1-to-1 or 1-to-2. But what you can do is look at how you're going to be short 80%, 90%. Look at how you're going to take profits. Are you going to take 80% off at 1-to-1, 90% off at 1-to-1, or 80-90% off at 1-to-2, and let 10 to 20% of the original balance keep running as a trailer? Leave some crumbs in the market. Yes, the masters will take their crumbs how best they can, but leaving something in the market to take advantage of any further moves to the downside. Now, it doesn't necessarily mean you've got FOMO, that you're holding on to positions, but what it does mean is you are getting the ability to capture more of the move if it moves in line with your overall narrative and idea. If you're okay with just hitting a hard TP at 1-to-1, 1-to-2, that won't be a problem. Not a problem for me, it's your edge. But there's just a fault and a fear, you know, you're not always going to get runners. You're going to hit a 1-to-1, 1-to-2, it's going to reverse and then take you out for that remaining 10 or 20% of the existing balance. So, you know, if you had one lot on, or one contract, well, you can't have one contract on and actually scale out of that depending on what you're trading. But if you've got one lot on in terms of CFDs, and you know the minimum increment lot size or step is 0.01, then you could take out spot 8 of that lot. That's 80% of the lot, and you could leave spot 2 on, right? Or if you're taking 90% off, you're taking off spot 9 and leaving on spot 1. And you just run the trailer. But then realistically, there are going to be some moves where you get stopped out, be it long or be it short. Good morning, Ryan. However, by taking 80 or 90% off, you give yourself the opportunity to run the rest of the trade rather than just capturing a 1-to-1, 1-to-2. And that's okay. A 1-to-1 with a 60%, you know, even a 51% strike rate and above, but a 60% strike rate and above, or a 2-to-1, you know, a 50% strike, you're going to be making money as long as, of course, you have a good balance. Okay, usually the US session, Mohammed, I have to focus. I'm not able to talk, stream, and trade. I'm quite new to streaming, so I need to get used to that. But in time, definitely, I can realistically look at switching back or adding back London sessions and start trading European sessions again. I do flutter in it, but not as much as I trade the US. So there's that initial short in the markets. Depending on how you're looking at things, you know, you have to bear in mind that we're coming into decent volume. It starts to shut down here. You know, when I'm in this move, would I want to scale in here? I'm a bit low in the leg. You know, what is to the left on the M15? You know, there's nothing down here. So the expectation is that we'll get a pullback into at least balanced pricing. But as you can see, we pretty much attempted to mitigate it, but we didn't. We just came back into the VWAP and then traded lower. But adding into your position down here, it's too low in the leg. So that is a scenario where actually you may want to run, if you left the balance on that trade, you may want to start looking at running a trailer. And then you get taken out of the rest of your move in and around this area when price spikes. Alternatively, if you do so wish to, I don't really do this, but if you do wish to, move in your stop to break even. And of course, you could have just tried to manage that position. You wouldn't have got stopped out, but you'd still be in the trade. But it's entirely up to you how you manage the overall risk of the position. In terms of today, let's quickly look at the daily on euro dollar quickly. All right, so yesterday we had a really nice bearish momentum trade. Obviously, we've broke outside the previous day's range. So if I come down to the 4 hour, maybe we'll pull back into something like 116.2s, 116.4s at the very minimum. If we're going to keep like this, it's very, very corrective PA with them expansive moves to the downside. So M15, again, that's that leg there. It's not the cleanest. Trading, mid-high, sweep, take out that weak high, respect. Awful PA if you look at it, right? Look, we're holding this whole range. We've had that sweep here, a fake breakout basically, and then we're doing exactly the same. So we need to see some form of conviction, some form of breakout, ideally to break out this low to the left, and then we can look for shorts to the downside. That's realistically the overall continuation of the play. Or we start to rebalance a little bit more. Depends on where the market wants to take it, where US wants to take it. I mean, going into the weekend, realistically, I'd expect risk to be lower in terms of currencies, just because we've got a lot of geopolitical tension and uncertainty in the world. So most people will be looking for safe havens right now, rather than looking at getting long risk into a weekend where there's a lot of indecision. But does that make sense for you, Wiz? Continuation shorts into the downside, maybe like the 114, anywhere between 113.96 up to about 115.5 realistically is the range that we're targeting. So shorts from 116, but we're not, we can't just hit a short. We're in that range. If you want to take a short there, fine, but you gotta be careful. It makes a lot of sense. Cool. All right, so let's take a look at Kiwi dollar, because you mentioned Kiwi dollar as well. I don't obviously have that on my short list because I don't trade it. It's probably going to be very similar. All right, so I'm just showing you some key levels just to give you an idea of where market's moving so that we can actually pinpoint it. So we're creating a lot of lower highs in the market. We're not really creating any lower lows on the overall higher time frames. Internally, we are. You can see that, but we've got a lot of erratic PA. So we've got sweeps, fake moves, fake strength. We come into a bit more zoomed in. Now, bearing in mind, this is from August 2025, right? So we're just looking at understanding what's going on in the PA before we actually just decipher this last bit of PA. So we can see what happens on the left. We can then look to understand and identify potential opportunities from the right. So this is actually really nice from that move. So huge move to the downside. We swept this, but we failed to take the low. We broke this structure because we swept this. So we swept this, which means this low is weak. So we're going to obviously target this low from here. Once we come back, prices then respected that strong area of supply. So we're obviously going to be looking for continuations in the leg. So we'll be looking for moves down here. So we had this sweep. It failed to take out this high. I'm just seeing if there's anything in here. The only potential area of supply that we actually took out was this, but I don't like it, and it's very shitty PA. This whole area here is very corrective, like so. Let's move this in. We obviously had this sweep. You can see the sweep or the fake breakout, but it didn't take out that low at 54s, 54 3/4. So now coming onto this front leg, I think so shorts off of 59s on the daily, depending on how you want to play this. On the daily, you've just got short on the daily, okay? So on the daily, you're short. You'd probably have your hot stop above this. I don't really like putting it above structural swings, but you know, sometimes you have to be safe. Seacrest Markets obviously has your indices, but we don't have what you call real futures like ES1 or MESH6, which is obviously micros, or NQ, or SI or GC at the moment. We only pretty much provide a CFDs product across Seacrest Markets. Maybe in the future we'll expand out into futures specifically, or have a hybrid of the product, but I'll have to talk to the exec team to understand and identify the plans. There are obviously a lot of discussions all the time through management and through the employees of the company, and we take a lot of our ideas to the execs, and we let the execs kind of tell us what we should do. We sit down and we discuss everything. So maybe in the future we'll expand out into futures. However, at the moment in time, it's just purely CFDs as you see them. Good morning. So Kiwi dollar on the daily would be a short at this moment in time. You know, we're still holding that support level realistically, so it's a range bound short. We need to see a breakout for us to actually be really bearish, but targeting that lower level will be my first port of call, and then looking to take off. Because it's a range, it's a bearish range, I'd be looking at maybe taking 90% off of that position, and then letting the balance run. And if we get a breakout to the downside, then we can look. Alternatively, if it holds that support area, then we could maybe actually look and flip and get long. So we have to wait and see. Coming down into the 240-minute chart, so the 4 hour, same scenario. Questionable. Why did this demand area here get respected if supply is in control? Well, at that moment in time, on the 4 hour, it wasn't really the nicest. We did obviously have demand fail, which is here. We had a piece of crappy demand fail here, or a support level fail here, and a support level fail there, and an overall support level here, which is, that's not the best line. I'm just giving you a visual to show you where I'm looking at. We've then traded down. Why did this demand get respected if supply is in control? Because you've got multiple areas of supply that have been respected on the way down. Similar scenario on the 4 hour, we'd be looking to get shorts. You know, where would be looking for short? It would be here for me. Obviously on the M15, M5, we're going to be able to get short a little bit nicer. I'll go into the S&P, no worries, Mr. Sabi. We've got 25 minutes, so that's not a problem. So on the 4 hour, I'd be realistically looking to get short inside here. Stop would be probably up here, 1-to-1 at the absolute max on this trade by the looks of it. And then, of course, you're going to realistically be targeting 54s at the absolute maximal. But depending on how you trade, you may have got out of this position already with a 1-to-1. Let's zoom back in and see if we could have got anything else. So similar scenario. We've now traded below this leg here, right? So this is the new low. So last point of supply at the extreme is this one. So we're looking at some form of pullback into the extreme of the leg. Is there any other supply that failed? Yes, there is. This one. This actual supply here was the last pullback before the move. So this realistically either could be a level that we trade off of, but it's so low in the leg that I don't like it. So if you were to envision this being your overall extremes of the move, right? So realistically, you want to be looking at shorts inside here, and you want to be looking at longs inside here, inside the discount of the leg. And then of course this is the premium of the leg. So if I'm looking for shorts, I'll always focus the majority of the time on being short from here or here, with my main areas to get short after are here and here. So this is the first quarter of the move, this is the last quarter of the move, this is the 50% of the move. I want to be looking at getting long inside here, short inside here. Okay, so I tend to miss the first quarter of the move and the last quarter of the move, and I'll tend to catch the middle chunk, but I'll never get executed really in the middle. But if you look at the premise of what I've just mentioned, getting short from inside here is actually getting short inside the discount of the leg, which it can still work. There is still a probability element that you can get short that and it can be a good trade, but it's lower probability. So for me, I'd rather miss that trade because I'm already in it, bearing in mind, and wait for the move to come back to the extreme of the move, so into the premium of the leg, and then look for short. So similar scenario, if I was to get short this move, now bearing in mind, I don't like that bit of hair. If I was to get short this move, it would be from somewhere in here. And then I'm not even at the 1-to-1 mark at the moment. So I'd still be holding it, and actually I'd be underwater. So that's, that's how I would trade that. Into the M15. And this is getting pretty choppy in this PA now, right? So how are we looking at the M15 today? So M15 is bullish. We've had a sweep of the lows. I'll just trade it with a pen, actually. We've got a sweep of the lows. Supply held. We reacted, came back into the point of demand. Again, in the discount of the leg. We've then traded up. This level's failed. So supply has now failed. And we're long. High highs, high lows being put in on that leg. Why? What are we looking for? What are we looking for? We've got this huge wick up here, right? And it may just be targeting the entire range, which we're in. So I wouldn't realistically continue to be long inside this level. I'd be waiting to see what actually happens. So yeah, Kiwi dollar on a higher time frame, pretty readable. We're looking for a pullback into some form of area of supply. Then we'll look to get short. Specifically, if I'm looking at dollar strengthening as well. If I'm looking at dollar strengthening, then I'd be expecting risk like Kiwi dollar, Aussie dollar, fiber, cable, all to be short. Beginning of the week, I wasn't a USD ball off Musk. I was actually looking at strength. I was looking at euro strengthening, pound strengthening, and of course the rest. So I was looking at the DXY essentially weakening, so the dollar continuing to trade lower. But as I mentioned at the beginning of the stream, and this isn't a dig, if you want to go back and watch it on the recording, I'd love that. You can actually see the commentary in real time or in recorded time. The way the dollar has actually traded this week suggests that this could actually be the time where we're going to see the dollar strengthen. So we'll actually start seeing risk fall off. That's what I'm looking at the moment. Because the dollar yesterday rose 0.3%, traded up to 99.38. We're definitely seeing safe haven flows because there was better than expected jobless claims. We saw euro fall to 116.5, which was down by the annexation of Greenland. There's obviously a lot of rhetoric which continues to plague pretty much the whole of European currency forecasts. We saw dollar yen approach 160, which means that it kind of falls on the back of the political uncertainty around Japan, because there's the potential now for snap elections, which weakened the yen. So we're getting a lot of flight to safety right now. So we're seeing the dollar strength, we're seeing gold kind of strengthen / plateau. So yes, there's a transition in my thinking, and that's the way I look at markets. And it's a bit like, well, we have to adapt. DXY, it's the dollar index. So the dollar index is the basket of majors. It's formed pretty much of the euro versus the dollar. 57.23% roughly is the euro. So if the DXY, the USD, is long, you're going to be short the euro. So if the DXY is bearish, you're going to be looking at euro longs. If the DXY is bullish, you're going to be looking at euro weakness and risk weakness, right? Euro, pound, Aussie, euro, not really the pound, but euro, etc. I'm both laugh, live, love. So I'm an intraday trader, but I'm also a position trader as well, long-term investor. But my longer term stuff is in single stocks and US markets. Intraday is primarily exploiting differentials in indices, mainly. Does that make sense? Wiz on Kiwi dollar, on NZD USD. Wicked. Quickly cover dollar yen, and then I'll go into the S&P to wrap up. Nice. I hope my analysis provided you with clarification. So let me come out to the daily first. I'm not sure where the confusion comes in terms of dollar yen. I used to trade DAX 40, laugh, live, love. I don't trade it much anymore, just purely because of time. I'm pulled in too many places and expected to do far too much. So overall, this was the last high. Oh, damn it. Overall, this was the last high. I'd be expecting markets to pull back into something like this. So maybe a 155 on the dollar, which suggests dollar weakness, but doesn't really help my theory of dollar strength, right? Because that suggests the yen is strengthening. But from an ebbs and flows perspective, I'd be looking at markets to come back down here. If I'm looking at, the discount of this leg, then, anything below 157 potentially suggests long to me. So I'd be looking at that move. That's how I see it at the moment. It doesn't always work like that. Like if you look at the way we have here, it does actually. It does always work like that. Obviously, this is the last point of demand. We traded into the last point of demand. Where is it? It's coming to the discount. And I don't know. Let's have a quick look. Does that actually make the quarter? No, it does not. It does not. So that's, it doesn't come into the last quarter of the move, but it does set up. We have this. Why'd you do that? With this, we then come in with respect. We then trade higher. So this is like if you wanted to get long, it's prime. So we have a long from inside here. VWAP doesn't really work that well on FX, as you can see. There's no VWAP, so I can't even play this. But VWAP would be running at about here. So realistically, long from here. If you're going to add to this long, then unfortunately you're getting long inside the premium of the leg. So you're probably long inside that. There's a 1-to-1 on both of those trades. No worries at all. Seacrest Markets team are great. We try our best. So I'd be expecting a pullback in dollar yen right now on the daily. On the 4 hour, this is an area of demand that we're looking at. We're holding that demand. I don't expect that demand to do anything. It didn't do anything. Markets had already broke out. This just based and then traded up. So it was a breakout, retest, continuation, right? So very, very corrective PA inside this. If you just look, we had some form of a pennant continuation. So price just traded out to the upside, exhausted. I'd be expecting, you know, just crap PA. Just crap, you know, I'd be expecting this to come back down. So yeah, it forms my whole idea along with the daily time frame, the trading into the M15. Let's see if we could have caught. We don't like trading tops, but let's see if we could have traded anything, just because it's good to learn. It's good to analyze. So this was that last range, right? We could mark that whole thing. We had this level, and then this level here. So this demand reacted. We had a sweep on this demand, but it failed to take out the highs, so we rolled over. So we're now starting to create a lower high. We've then broken to the downside. Obviously, expectations originally would be for us to pull back into 159 roughly, and that still could happen, right? I doubt it's going to happen now, but it still could happen, and it could be used later on in market life. We got this horrible big wick here. We've traded below. We've come back into the extreme. So we know we're short, right? So if we could play longs from here if we were looking for a pullback into this. So look at this. This is consistent with everything I talk about, right? So why didn't I mark this out? Yes, it's a demand, but what is it? It's a weak demand. Why is it a weak demand? Because it failed to take out this high. So what then happened? We swept it. We're now looking to target this. So as our first move, we then come back in. High highs. We take out all of this liquidity. We come back into the extreme of the leg. We trade up, back into the extreme of the supply. And then we rebalance. Okay, where's the supply? Here. Where's the demand? Not the best, but it's here. Okay, after that supply has taken control and demand's failed, where are we looking to get short from? Here. We're looking to get short from here. Price comes in, builds liquidity, trades back down, gets shorts trapped, trades lower, takes out the stops. We then fail. Supply gets respected. We then take out this demand. Comes back into the extreme of the move, which is here. Again, we're not going to be able to do that. We get short, so we are now short from here. Stops wherever you want, above here, doesn't matter. You can go higher if you wish. And then you're holding that short. That's Kiwi dollar. So everyone remember that you've got live stream 50 today. So live stream 50 is even better than live stream 40. Live stream 50, 50% off any challenge today only. 50% off any challenge. Now, bearing in mind, we are 75% cheaper than, we are 75% cheaper than the rest or the majority of the market. If you look at the majority of our other prop firms out there, we are priced at $500 on our 100K account. Our nearest competitor that's deemed one of the top 10 is $529. That's the closest to us. And there's been a lot of issues with them recently. So look at that, $500, 50% off. You're getting a 100K challenge for $250. That is insane. That is actually I would say that's probably right now, I haven't checked, but that's probably the cheapest 100K challenge in the market right now. $250, 100K challenge, some of the best rules in the industry. When it comes to restrictions, if you're a gambler, we have some of the most lenient areas as well. You know, we don't realistically increase margins. We don't ban you. We don't reduce profits. It's all yours. So if I were you, I would jump on that. It's 20 people only. So thank you very much, marketing, for throwing that out there. Live stream 50% off any plan, valid 24 hours. And I'm going to say this again so that hopefully my team will cut this as a short. Everyone, for today only, live stream 50. That means you get 50% off any plan for 24 hours only from this stream. We are cheaper. That means a 100K plan is only $250 for today only. Get that while it lasts. 20 people only. All right, so let me quickly cover US 500. I'll do this one for you all. US 500. I really forgot. I didn't get to talk cable. Let me just show you the cable trade very quickly. Might not be on this chart because I had it on this tab. This short called, you know, I don't know how many people got in it in this move, but absolutely insane. Wild move to the downside. Let's go back to the US 500. You are the best indeed. Well, I'm part of the team, so the team are the best. That's how I look at it. Come on. All right, so as you know, let me quickly move out. As you could tell, I'm on -5, so I'm looking at New York hours. So that short in cable yesterday looked like it was Asia session, but it isn't. So US Open, very corrective, but it was an expansive pattern. We broke out to the upside very correctively. So you'd want to see some form of demand hold. And then after that demand held, you'd want to see price trade higher. It didn't, so just rolled over. So what actually happened? We had demand hold, supply hold, demand then failed. So overall markets were looking for shorts. Again, we pretty much corrected through overnight session back into the extreme, and we're holding that supply level. So if you think, are we looking for shorts? You know, we could refine this because we've got this demand here, that failed. We're looking for the extreme. It's not going to work that well, but we've got that here. So we've got this short, and this is where you'd initially look for your shorts, which is where we were looking for shorts yesterday. So that's your first short. If you wasn't too comfortable with holding that and you're waiting for a further break of demand, then you've got this here, and you kind of continue looking for the shorts from there. There's a lot of move in that leg. You know. Decent move over an hour and a half. I find the live stream from your website fantastic. Yeah, obviously there's notifications on the company website. I really appreciate the fact that a lot of people are saying I'm learning a lot from your live streams. Thank you very much. Well, experience and time in the markets. I've been in this industry a very long time. So I appreciate that. Thank you very much. Obviously, US markets are closed right now, so I'd be looking at waiting to see where the markets are going to open. We have a change of character, which you can see. We have a high taken, we have a low taken. So we'd be looking for this supply to be respected. And it could just chop around really until the US session, and then we could look for continuation shorts to the downside. But let's wait to see what happens when the market opens at 9:30 a.m. Eastern time. And then, of course, we can look to take a trade if the market sets up. So does anyone have any other questions? I probably won't be able to break any more assets or instruments down. I hope I've covered everyone's questions so far. But just as a reminder, live stream 50% off any challenge for the next 24 hours for the first 20 people only. Now, bearing in mind again that we are 75% cheaper than most of the market out there. Our 100K plan is priced at $500. So if you're getting it for 50% off, that means it's $250 for the first 20 people today only. we're already 75% cheaper. So why would you not trade with Seacrest? But other than that, team, I'm pretty much going to start winding this down. There's not much more really for me. There's not many questions coming in. Overall, covered most of the market. Couple of takeaways. Wait for the market to show its hands. Stop trying to trade tops and bottoms. Let the market develop. You don't need to trade every single day. And remember, if we have an inside day, it's going to be a choppy day. So have a wicked weekend. Look forward to seeing you on the live stream. Same time every day, Monday through Friday, 8 a.m. to 9 a.m. UK GMT. But trade safe. Have a fantastic weekend. Get outside. Get your exercise in. Spend time with your friends. Spend time with your family. Reset. Plan for the week ahead. But have an exceptional weekend. And I will see you next week.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check.